Welcome to this lesson on personal finance fundamentals. Today, we are going to demystify your paycheck by exploring the difference between gross pay and net pay. By the end of this video, you will be able to define gross and net pay, identify common payroll deductions, and calculate your own take-home tax percentage. Understanding these concepts is the first step toward effective budgeting and financial planning. Let's get started. Let's start with the basics. When you receive a job offer or look at your salary, you are usually looking at your gross pay. Gross pay is the total amount of money you earn during a pay period before any taxes or other deductions are taken out. For example, if you earn $25 per hour and work 40 hours in a week, your gross pay is exactly $1,000. However, that $1,000 is not what actually ends up in your bank account. That is where net pay comes in. Net pay, often called take-home pay, is the actual amount you receive after all the mandatory and voluntary deductions are subtracted from your gross pay. It is the money you actually have available to spend on rent, groceries, and savings. Think of it as a simple equation. Gross pay minus deductions equals net pay. So where does that missing money go? It goes toward deductions. Let's break down the most common ones you will see on your pay stub. First, we have income taxes. Most people pay federal income tax, and depending on where you live, you might pay state and even local income tax as well. Next is FICA, which stands for the Federal Insurance Contributions Act. This consists of Social Security and Medicare taxes. For most employees, Social Security takes 6.2%, and Medicare takes 1.45% of your gross pay. Then there are voluntary deductions. If you get health insurance through your employer, a portion of the premium is usually deducted. Similarly, if you contribute to a retirement plan, like a 401k, that money is taken out before you ever see it. Because of these combined factors, your net pay will always be significantly lower than your gross pay. Understanding these categories helps you see exactly where your hard-earned money is being allocated. Now that we know what deductions are, let's learn how to calculate your take-home tax percentage. This is a vital skill for budgeting because it tells you exactly what portion of your earnings you actually keep. To do this, you first need to identify two numbers from your pay stub, your gross pay and your net pay. The difference between these two is the total amount of money deducted. To find the percentage of your income going toward these deductions, you divide the total deductions by your gross pay and multiply by 100. Alternatively, you can find your take-home percentage directly by dividing your net pay by your gross pay and multiplying by 100. Let's look at an example. Imagine your gross pay is $2,000, but your net pay is $1,500. Dividing 1,500 by 2,000 gives us 0.75. Multiplying by 100 gives us 75%. This means your take-home percentage is 75%. And your effective tax and deduction rate is 25%. Knowing this number helps you estimate future paychecks if your hours or salary change. We have covered the essential differences between what you earn and what you keep. First, we looked at gross pay, which is the total amount earned, versus net pay, which is your take-home pay. Next, we discussed deductions like taxes, FICA, insurance, and 401k contributions. Finally, we practiced the percentage calculation, where we divide net by gross. To recap, gross pay is the big number at the top of your contract, while net pay is the actual amount that hits your bank account. Deductions like federal taxes, FICA, and health insurance bridge the gap between the two. Let us do a quick formula check. Net pay divided by gross pay equals your take-home percentage. By calculating your take-home percentage, simply dividing your net pay by your gross pay, you gain a much clearer picture of your financial reality. Use this percentage to plan for raises or new job offers. A common mistake is budgeting based on your gross salary. Always remember to use your net pay when planning your monthly expenses. Now you are equipped to look at your next pay stub with confidence and a clear understanding of where your money is going. Thank you for joining this lesson on understanding your pay.